Oyez, oyez, oyez. Anyone having business before the King's Justice of the Superior Court of Justice attend now and you shall be heard. Long live the King, the Honorable Justice.
Good morning, all.
Good morning.
Can we just go off the record for a moment? Talk whenever you're ready.
Good morning, Your Honor. Today, Ontario will be calling its third witness, Professor Michael Smart. With the court's permission, we propose to divide the examination chief between myself. I will be taking Professor Smart through his evidence, through his background. Given your comments yesterday, I've condensed that section, and his experience, and then NCRR revenues. My colleague, Mr. Lipton, will then take Professor Smart through his evidence on NCRR expenses. And then Mr. Marcello will complete the examination in chief with a focus on present value.
Okay. My
friends have no objection to the division. With respect to timing, we are currently scheduled for 4 days for the examination in chief, and that is sufficient time. We expect that will be sufficient time for the examination in chief.
Okay.
Before the witness is sworn in, I'd like to enter a document as a numbered exhibit. Copies have been provided to the court, both electronically and physically. This document is titled Expert Qualification of Michael Smart and Agreement as to the admissibility of his reports.
Exhibit 59. Mr. Okay.
Paragraph 1 of the qualification reads, for the purposes of stage 3 of this case, the parties agreed to the expert qualifications of Dr. Michael Smart as follows. Over on page 2, 1A, an economist qualified as an expert in the concepts of and ways to measure government revenue and expense, public economics, economically appropriate ways of aggregating dollar amounts over time, including interest payments to compensate for the time value of money, the estimation of nominal and present day values, economic theories of bargaining, the analysis of economic and financial data, and economic principles that touch upon the issue of sharing.
And counsel, this is on consent?
Yes, that's correct.
Thank you.
I will be taking Professor Smart through a brief summary of his qualifications, and at the end of those, I will be asking your honor to qualify Professor Smart pursuant to this agreement.
Thank you.
So Ontario calls his next witness, Professor Michael Smart.
Thank you.
Michael Smart, M-I-C-H-A-E-L, S-M-A-R-T.
You swear that the evidence to be given by you to the court touching the matters in question between the parties shall be the truth, the whole truth, and nothing but the truth.
Yes, I do. Sorry. Thank you.
Good morning, Professor.
Good morning.
You should have in front of you a copy of this document we just referred to, the expert qualifications. Do you see that on your desk?
I have left my copy behind you, Mr. Hong, so if it's important.
I think there's a fresh copy in front of you. And there was a...
You are correct. Go ahead.
There was a minor alteration through discussions with counsel, so that's probably the better version. If you turn to page 2 of this document.
Yes.
At paragraph 2, do you see that?
Yes.
So subparagraphs 2A, B, C, D, and E refer to 5 expert reports. Do you see those?
Yes.
Do you recognize those reports?
Yes.
Did you co-author those reports with Professor Bodway?
Yes, with Professor Robin Bodway.
Thank you. And you have prepared, and in sub 2F, you prepared work papers and associated with those reports.
Yes.
Thank you. So I would like to enter these reports as official exhibits into the record. And I'll start with the first one, which is at 2A. And it's titled, it's the large volume, Your Honor.
I'm going to work with mine and we'll get the court ones marked as we go through. Go ahead.
It's titled Net Crown Resource-Based Revenues in the Robinson Huron and Robinson Superior Treaty Territories.
Very good.
We can enter that as Exhibit 60. The second report at 2B is titled The Value of the Augmentation Promise in the Robinson Treaties. And we can enter that as Exhibit 61.
Is it called The Value of the Augmentation Promise?
That's correct, Your Honor.
Okay.
And then we have, it's about an inch thick, a report titled Response to Expert Report for Restool et al. Of Joseph Stiglitz and David Hutchings. And I'd like to enter that as Exhibit 62.
Thank you.
And then we have two additional smaller volumes. The first one is titled Sir Reply to Expert Report for Restool et al. Of David Hutchings, of Robin Bodway and Michael Smart. I'd like to enter that as 63. Yes. Sir,
Sir, reply. I'm just trying to distinguish between the last two in front of me. So let Sir reply to the expert reply report of Hutchings.
That's right. Of Robin Bodway and Michael Smart.
Okay, so that's 63.
63.
Okay.
And then the final one is titled Sir Reply to Expert Reply Report for Restool et al. Of Joseph Stiglitz and David J. Hutchings. That should be 64.
Thank you. Council, any issues with marking these as exhibits 60 to 64?
No.
Thank you. Thank you. Canada, thank you very much.
Now, in terms of the work papers, they are too voluminous to provide in hard copy. My friends have insert copies, so I'd like to enter them as a collection, as a separate exhibit. That would be 65 if possible. So we'll send them electronically to the registrar.
And they're not part of the joint exhibit book?
So the original ones from June 30th of 2002 are, but the revised ones are not.
So they should be called the revised work papers with a date?
There's multiple dates.
There's multiple dates in a series of work papers, and part of what I think is important is to track the changes.
Okay.
And in order to track the changes, you need all the work papers as they change. And
so is it best that we just list the dates in a single exhibit of the work papers? How have you been working with them as single documents by date, like the different dates? Are they distinct documents?
Yeah, I think it would. It'll be helpful to list them by date because then they can be described that way on USBs. I think, anyways.
So what I suggest we do is that we'll package them up by separate date, and then we'll confirm their numbers in the morning.
Okay,
So
let's, we don't need to enter them as numbered exhibits.
At this time.
Right, so once you've done that, is that, we can enter them then.
Yes, Your Honor, thank you.
And just make a note of these exhibits.
Of course.
When you're ready.
Professor, we've asked this of other witnesses, but do you waive copyright on these 5 reports?
Yes, I do.
And we'll ask the same of your co-author, Professor Broadway, when it comes next week. Now, I understand you've also prepared a set of demonstrative slides for this testimony.
Yes.
And these have been distributed to my friends and the court. I would like to enter this volume as a lettered exhibit. Professor, can you confirm that you signed an acknowledgement of expert's duty and to assist the court in this case?
Yes.
If you could pull up Exhibit 60, which is your main report called Net Crown Resource-Based Revenues.
I have it.
We're going to turn to Appendix D, which is found at tab D. We can put that on the screen. It's a copy of your CV.
Sorry, it's in 60?
Exhibit 60, Your Honor.
Got it. And the CV is at?
Tab D, as in dog.
Got it. Thank you.
Professor, this was the CV you provided at the time of first writing this report. Is that correct?
Yes.
Have there been any material changes relevant to this case, to this CV, since you provided it?
I've written a few more papers. I don't think it's material to this case.
Thank you. Now, looking at the first section, I see that you have your PhD from Stanford University.
Yes.
And you've listed something called 3 essays in public economics. What is that?
That was the title of my PhD thesis in 1995.
And what was the subject matter of that?
Public economics.
And employment, you are currently, since 2006, you have been a professor in the Department of Economics at the University of Toronto.
A full professor, yes.
Thank you. At the bottom of the first page, you have a category listed visiting positions. What is that?
These are cases where I was away from the University of Toronto and resident at another university, or in one case, a government department.
I see. And I see there you've listed the University of Munich and London School of Economics.
Yes.
And Department of Finance Canada. Can you tell me what that position was about?
The year 2008-9, that is the academic year, I was what finance calls a special advisor within the department, where I worked on issues related to intergovernmental transfers.
Okay. Turn to the next page, page 187. You have a section called Honors, Fellowships, and Affiliations. Now, I'm just focusing on the first item there, the Board of Management item. Can you tell us what that entails?
The International Institute of Public Finance is an international scholarly body of academics, mainly academics like me, who work on public finance and public economics. Those are two almost equivalent terms to describe my field of study.
Public finance and public economics?
Yes, they're essentially synonyms with small distinctions that we can discuss, of course, if anyone wishes. I'm on the board of management, which is a board of directors, I suppose.
And could you explain for the court, what is public finance?
Public finance is the study of governments and their role in the economy, broadly speaking. Public economics is essentially the same as what I just said, study of the role of government in the economy. If we were to make a distinction between those two terms, but I personally do not, public finance would focus more on the nuts and bolts of how to measure government and its role in the economy. Public economics might be a term describing the broader theoretical issues as well. Again, I don't make any strong distinction between those two terms.
Yeah. Now, the next section you have on this page is titled Editorial Roles. Can you tell us what that is?
So cases in which I served as an editor or an assistant editor of one kind or another for various international scholarly journals.
And then flowing on page 188, which is the next page, you have a section on grants, and then you have a lengthy section, I think it's 8 pages long, on research papers. And I know you highlight some of these in your slide deck, so we're gonna skip this for now. If you go to page 196 of Appendix D, I have a section titled Professional, if you go to the top of the page, a section called Professional Consulting. Can you explain what this is?
These are cases where I conducted research or wrote reports for paid compensation outside of my employment contract to the University of Toronto.
Okay, and you've listed a number of organizations and governments. These are your clients?
Yes.
And they include both public and private clients?
Yes, government and non-government, yes.
Right. Next section on page 197 is titled Selected Written Reports. And how is this different from your previous section about reports and articles?
This is a selection of the specific reports that I wrote as part of my professional consulting activities. It's probably not all of them, but it's an important selection of the work I've done.
When you say your professional consulting activities, is that different from your paid work outside the university?
No, those are the same things, Your Honor.
So they're characterized the same way?
Yes.
Okay.
These are the specific written reports in contrast to the prior page, which was the list of those claims.
Got it. Thank you.
And if you go to the next page, page 198, at the bottom, you have a section titled Professional Service Referee Reports. Can you tell us what you mean by referee reports?
Well, as you know, academics engage in peer review of their research. This is a list of the academic journals for which I've performed that service for others, the peer review process. I'm pretty sure this list is really not up to date. I have not kept it up to date for several years.
Thank you, Professor. Now, in the course of your expansive work, have you dealt with the public accounts before?
Yes, I have.
And does that include the public accounts of Canada?
Yes.
And you've dealt with the public accounts of Ontario?
Yes.
And you're aware of how the public accounts are organized?
Yes.
And you're aware of how government revenues and expenses are reported in the public accounts?
That's a broad subject, but yes, I have good awareness on that subject.
Thank you. And you know this case deals with the concept of economic rents. Have you ever dealt with the concept of economic rents in your previous work?
Yes, I have.
Are you an economist?
Yes.
Your Honor, those are my questions on qualifications. Ontario asked that Professor Smart be qualified as an expert as pursuant to Exhibit 59.
So to the agreed paragraph
Yes, Your Honor.
on top of page 2.
Yes.
I thought that was on consent. Thank you. So yes, this witness is qualified to, as an economist described on page 2 in paragraph 1 of Exhibit 59. Thank you.
Thank you, Your Honor. So let's turn to your demonstrative slides, Professor, which is Exhibit U. Do you have that in front of you?
I do.
Did you prepare this document?
Yes.
Okay, let's turn to the first section. Looking at slide 2, you titled it Section 1, Introduction. And then you begin on slide 3. So can you explain what you have on slide 3?
Our instruction letter from Council for Ontario included specific questions we were asked to address in our reports. This is my summary of those questions, of the issues that arise, and I'll just quickly take the court through those questions by way of introduction. First is, based on economic principles, how can net Crown resource revenues be measured? We call these NCRRs, net Crown resource revenues. I find it hard to say that acronym, so often I'm going to say NCRs, but it should be understood. I hope that's okay. Should be understood. I mean, net Crown resource revenues. Both R's are important here. The second question is, so that's the conceptual. Number 1 is the conceptual question, but number 2 is the measurement question. What were the NCRs in the RST area for each individual year from 1850 up to 2019? I'll note that our accounts are on a fiscal year basis. They don't correspond to calendar years. When I say 2019, I mean, and I believe the other experts as well, mean 2018-19 fiscal year. The third question
Sorry,
is...
when you say 2018, that's the 18-19 year?
No,
it's
Your
the
Honor.
17-18 year.
That's right.
Got it. So when you say 2018, it's the year, it's the fiscal year ending 2018.
That's right.
Got it. Thank you.
The third question is, given NCRs, what share of NCRs, what sharing of NCRs, perhaps better, would be consistent with the expectations and understandings of treaty parties and could be paid without incurring losses to the Crown, without incurring loss in the sense of the treaty? In the sense of the treaty. The fourth question is, based on economic principles, what's the value of such payments, including interest to the present day? So the issue here in number 4 is what we call present value. It's adding compensation for the time value of money to the original nominal amounts that I've been talking about so far. And the fifth question is, what are the implications of all of the calculations under 1 through 4 for Crown allocation?
Thank you. Now I noticed in item 4, you have some words in blue, including interest to the present day. Explain why they have a different color.
Well, the blue is my way of emphasizing certain words on the slides. It's standard for economists. It may be surprising to the court. Maybe you don't do it that way here. So I hope it won't be a problem. If anyone is looking at a black and white or grayscale copy of the slides, I think it appears as a gray, a slightly lighter color. I will note, if it's important to the court, I use italics to mean other things within the slides. And I wanted to be sure that as I talk through, I was able to notice the points to emphasize. So it's really an aide memoir for myself.
I see. Thank you. Now on slide 4, you've listed your reports again. See that? But before we move on, have you read the reports of Professor Stiglitz and Mr. Hutchings that were filed in this case?
Yes, I have.
Have you read any other expert reports that have been filed in this case?
I have read parts of some other reports. Should I list?
Please.
My recollection, yeah. So I've read parts of a report by Professor von Gurnet and all of a report by Dr. Eric Angel, prepared at the behest of Ontario. In addition, I don't recall reading any other specific reports in this case at this time. I think that's all that I've read.
Now, can you take us through what's to be an overview on the next 2 slides, 5 and 6?
Sure. So thank you. So as you know, all of my reports are co-authored with Professor Bodway. We're going to also divide the testimony about our reports. And I want to give the court a sense of how that will play out. We're going to do it in sequence. I go first, and I will testify about these issues. Number 1, the economic concepts of resource rents and net crown revenues from resource rents. So the key concepts that lead to the NCR calculations. Second, the process of estimating NCRs and the results of those calculations. Third, the key differences between ourselves and Mr. Hutchings, retained by the plaintiffs, in respect of the nominal estimates of NCRs for the RST. And nominal here means we first measure all values in terms of the dollars of the year in which those amounts would accrue. Talk about the dollars of the day. So nominal values means $1 in the year 1930 is a dollar as a dollar was valued in the year 1930. So I'll deal with the differences between ourselves and Hutchings on nominal values. Then I will talk about our approach to calculating the value of the augmentation promise. That is the way in which we believe annuities would have been augmented. And I will talk about how we convert all nominal values, whether of NCRs or of annuities, into present day values, compensating for the time value of money.
Okay, and slide 6.
So just a preview of what Professor Bodway will talk about. He will focus on...
There's something going on here.
Sorry, please continue.
Professor Bodway will focus on contrast between our opinion and Professor Stiglitz's opinion above all. And so I'll highlight 2 issues that Bodway will talk about. He'll talk about Professor Stiglitz's view of the treaty as what Stiglitz calls a joint venture between the Crown and the Anishinaabe. And he will talk about Professor Stiglitz's, in our view, expansive notion of the revenues that he says that Stiglitz says the Crown could and should have collected. And he'll contrast Professor Stiglitz's view with our own.
And when you use the word expansive notion of revenues, is that the notion of economic rents?
That's the notion of economic rents, Your Honor. The next point is about interest rates and present values. I'm going to present our approach to present value. In the process, I'll raise some of the distinctions between our approach and the Hutchings-Stiglitz approach. The main issues here, the conceptual issues that underlie economists' calculations, I will try to leave that to the extent possible to Professor Bodway to talk about next week, I believe. Here I've written, Professor Bodway will talk about why the interest rates and present value estimates of Stiglitz and Hutchings are inaccurate and inconsistent with standard economic principles. Next, Professor Bodway will talk about the implications of relative deprivation. I believe that that phrase comes from the Court of Appeal decision here. Of course, we mean the wealth of First Nations members, particularly Anishinaabe, who are treaty annuitants, comparing them to other Ontarians and thinking about the implications of that for the value of the augmentation promise. That's Bodway's job. And there are other, I would say, minor and miscellaneous differences between us and the plaintiff's experts that Professor Bodway will talk about.
Professor, in writing these reports with Professor Bodway, who was primarily responsible for the calculations and charts and figures in your reports?
That would be me. Professor Bodway and I discussed every aspect of every step, but when it came time to gather the documents from which we drew our numbers and then to actually perform the calculations on a computer, that was my job.
Thank you.
In consultation with, if I may add, in consultation with Professor Bodway at every step.
And did you have anyone assisting you in this work?
Yes, I did. I employed research students during the early stages of my preparation for my reports. They were involved in collecting documents from various sources and data entry, keying in numbers from older documents. All of the calculations were performed by me, myself, if that makes sense. The distinction is between entering the numbers and then performing calculations with the numbers. I did the latter.
Thank you. So I see on the next slide, slide 7, you've included certain items of your qualifications and experience. Can you explain what you've listed here and why?
Well, I don't want to talk about this any more than you feel necessary, Mr. Hong. You did a good job describing me and my work earlier. On this slide, I thought it would be perhaps tedious to go through my papers, my specific papers here, but I wanted to highlight the fact that my research is in public economics, particularly the theory of taxation of individuals and businesses, and the measurement of the impacts of taxes on individuals and businesses on the economy. Right? The theory of how to tax and the measurement of the impacts of actual taxes. That's what I work on. And the various editorial roles that I've done, that's really what I've focused on in terms of advising others about their work. It's on those issues. In addition to that, I have worked on issues of sharing through government transfer programs, including sharing of resource revenues. And during the year when I was a special advisor at the Federal Department of Finance, that's what I worked on. When I've been employed to advise other governments around the world, sometimes by the IMF, sometimes by those governments themselves, it tends to be a mix of those issues of taxation policy and of transfer policies among governments, both of which are highly relevant to the matter before this court. The last thing I would like to emphasize is my work at Finances of the Nation, which is an academic research organization that I founded and helped to lead. The job of that organization is to work on historical data on public finances, including revenues and expenditures of governments in Canada, and to give an economic interpretation to those data. So that's what we do at Finances of the Nation.
You just mentioned transfer programs. Can you just explain to the court what those are?
Perhaps through an example, one key transfer program in Canada is the equalization program, under which the federal government pays annual transfers to many of the provinces. Parallel transfers are paid to the territories, the 3 territories, called territorial formula financing. In each of those cases, the federal government's job is to estimate the revenues that provincial and territorial governments receive from resource revenues and income tax revenues and other sources, and then determine a way of sharing those revenues across all those governments in Canada. Again, I highlight that program because I think it's especially relevant to the work that I did in preparing reports for this court.
Thank you. So if we could, you could take us through the next slide, slide 8.
This is just a roadmap, a sense of how I will go about this. With your permission, I will not read all the words, but I want to start with a summary of our reports and with a focus on what has changed between June, when we submitted our original reports, and today. Then with that in hand, we'll go through it step by step. So we will already have talked by that point about the conceptual approach that we took. Then I'll take you through the estimation process for nominal values of NCRs, then through our way of converting nominal values to present values, that is, including compound interest up to the year 2020 to compensate for the time value of money. Then we'll talk about our approach to augmenting annuities in a way that's consistent with the treaty, and methods of sharing NCRs as a way of determining the value of those augmented annuities, which is consistent with economic principle and consistent with the treaty itself and what it says in the augmentation clause. I will speak only very briefly about Crown allocation, and I'll wrap up with our bottom lines.
Great, thank you. So I see your section 2 starts with the next slide, slide 9. Then you begin that section at slide 10. Can you take us through this?
Right, well, now we begin. So I want to start by emphasizing the changes to our estimates since the original June report. These changes reflect a variety of factors. First, there are some minor corrections to our calculations and our data, which were discussed in our SIR reply report of December. There are 2 additional changes, or 1 additional change not discussed in that report. As well, we've adapted our treaty map to correspond to the agreed treaty area, as I'm informed, has been agreed between the parties. And so this table shows you the key values that we arrived at in our June report and contrasts each one of those values to the value we assign now to those amounts. Each one of these is a value of annuities that we think could be payable under the augmentation clause. And all of them, therefore, are distinct from the value of NCRs. And I'll make that distinction very clear as I go forward. But these are our bottom line numbers. These are the value of annuities that we think, under our approach, would have been payable in the past. And they, of course, all of these are present values. That is, they include interest up to the year 2020.
Okay, let me just make sure I have this. I presume that's the interest at 5% that I remember reading about.
Your Honor, the interest rate does change from year to year.
Oh, okay.
5% is a good notional value to bear in mind.
But
fluctuated,
anyway, interest up to 2020.
That's right. And just to give you a sense, I think probably the lowest interest rate we ever record in 1 year is 3%. Some of us are old enough to remember the late 1970s, early 1980s, when the rates in nominal terms that were paid on bonds rose as high as, I think, 18% or something on that order. So that's the range.
I'm in that generation.
Thank you, Your Honor. I am too. So that's the range that we have, but 5% is a good kind of notional annual rate of interest to bear in mind.
Can I just go back to one of your first statements on this slide, and that is what changes it reflects? I was just looking at my notes,
yes,
or in the transcript, but maybe you can repeat that if you don't mind.
Yes. So we have changed various elements of our calculations since our original reports were submitted in June of last year. I'm now going to go through the most important, I'll make some discussion of all aspects of what we've changed since June 2022. Later, I'll go into some details about those, but I want to be upfront that our numbers have changed, and this is how much they have changed.
Okay. So the changes that you're going to tell us about are reflected in these numbers. These, as you just said, are your bottom line numbers reflecting those changes. All
of the numbers after this slide will be our new numbers, fully reflecting every change that we have made. This slide is to give you a sense of what economists would call, or economic nerds at least would call, the delta, the change in those numbers, just to give you a sense of how big these changes are.
Thank you.
And so these are values, as I said, present values of annuities. We consider various different sharing models. And so there's no single number here. We talk about shares. In this slide, you'll see that the rows are the different sharing models. The first three are labeled shares of unadjusted NCRs. These are various fixed shares that have been discussed by the various experts in this case. We could share every year on the basis of 100% of NCRs, or it was suggested 84% or 50%. And so we've done all our calculations for those three fixed sharing models. But we have our own sharing model, not discussed by other experts, that we call risk-adjusted NCRs. And that's the fourth row here, number 2 in the table. That's our preferred model of sharing. But we will talk about all 4 of these sharing models.
Can you attribute a percentage number to your model?
We can, but it changes from year to year, Your Honor, and I'll make that very clear, but not for a couple of days. And so if there are any follow-up questions, I'm happy to answer them.
I am rarely put off so smoothly.
Thank you. I think. So what is the delta? How much do the numbers change? It depends on the concept, but the changes are not trivial, I would say. They are consequential. For example, if sharing were to be based on 100% of annual NCRs each year, previously we valued the augmentation promise at $772 million. Now we think it's $999 million. And I'll call that $1 billion from now on. I'll round that to $1 billion. So that's a change of $227 million. It's substantial. I must admit it's a substantial change. Of course, I feel compelled to apologize. Some of these changes were outside our control. For example, the agreed boundaries changed, but some of them reflect errors in our original report that we've only now corrected. Now, if you take our preferred sharing model, previously we had said that the value of augmented annuities would be $336.9 million. We now believe it is $387 million. So in proportional terms, in percentage terms, still not insignificant, but smaller, of course. And again, these, thank you. Again, these are the values of annuities. They're based on NCRs, and I will spend a lot of time talking about our calculation of the NCRs as well, but these are our bottom lines.
Do you want to move on to slide 11?
Please.
Explain to us what's on this slide.
This is the description of what changed between June and today. First point is that we corrected 2 transcription errors, which were pointed out by Mr. Hutchings in his reply report of last fall. These are relatively minor changes. One of them affected the railway subsidies included in our accounts for some years, or rather they affected not the subsidy amounts, but the share of that subsidy that we estimated contributed to resource rents. Another one led fish and wildlife expenses to be included in our accounts of NCRs for a few years when it was not our intention to include fish and wildlife at all.
Now, before you move on, can you explain what fish and wildlife expenses are?
These are the programs of the resource ministries of Ontario. In this case, we only studied the Ontario public accounts that were related to programs in managing and imposing charges on the fisheries industry, including the sport fishing, as well as the commercial fishing industry, and game and wildlife resources of various kinds, including fur trapping. We would include all of that in what here I've called fish and wildlife. The plaintiffs' experts in preparing their reports, they excluded fish and game. And my sense is there's an ambiguity about whether those resources would be covered by the augmentation promise. I regard that as a legal issue on which I'm not an expert. We made a judgment that because of that ambiguity, it would be better simply to follow Mr. Hutchings and Professor Stiglitz here and exclude Fish and Game from our calculations. That being said, it turned out there was one cell in a particular file that led that to be included. Mr. Hutchings pointed that out, and I've now corrected that.
Just want to make sure you said Fish and Game. That's the same thing as Fish and Wildlife?
It was called different things at different times. Wildlife, I think, is a more encompassing term. Game means the hunting of wild animals for either commercial or sport purposes. Wildlife might include. I think in this particular case, that one particular item in our accounts was labeled as Fish and Wildlife, but really Fish and Game is a better way to refer to the specific resources we're talking about.
I see. So please continue.
So another example of these changes to our calculations, we have taken a category that was in our accounts before called Recreation, Resource Management, and Protection. That refers to the expenses of one Ontario department for a sequence of years, I think in the 1990s, the 1980s through the 1990s. And we've been able to, and you can see that in there is the term recreation. And our intention is never to include recreation programs, spending on recreation programs in our calculations. We found after reading the Hutchings reply that we were able to disaggregate that further to remove the recreation component of it for certain years. And so we did the recalculation excluding. Now, that had no impact on the bottom line that I just talked about. I'll explain why. The only thing that excluding those amounts in the 1990s affects is our estimate of the value of NCRs, which, as I will discuss very soon, we estimate was a negative number. We estimate that NCRs from the RST was a loss overall over the 170 years, including interest. And in making the particular change talked about on the middle bullet on this slide, that negative NCR value gets smaller. The losses get smaller. But as I will explain, has no impact on our estimated value of augmented annuities under our approach to augmentation.
And the next bullet. Sorry, just before we move on, my colleague reminded me, when you say RST, can you clarify exactly what you mean by that?
RST is our acronym for, of course, Robinson Superior Treaty, but I think I'm also using it as others do in this case to refer to the geographic area that we believe the treaty encompassed. So RST could mean the treaty or it could mean the area.
The territory.
The territory, yes.
Thank you, Professor.
So we're on the third main bullet here, which says we have revised estimates of railway trackage in RST. So this is a very recent change. In preparing for today, I realized that there was a better way to calculate the share of railway trackage in the RST for a particular railway, for two particular railways, and I made that change. The last point here is simply to talk about the overall impact. The overall impact is to increase the value of the augmentation promise as we calculate it. Each one of these changes increases values.
Now, you mentioned it for the railways, but I understand that some of these changes were very recent.
The railway change in particular was just this past weekend. In preparing for my testimony and imagining giving my testimony, I thought to check one assumption that I'd made about railway subsidies paid by the government of Canada 100 years ago. I went back to check that based on the information that I gathered. I thought it was better to recalculate. Result of the recalculation was to reduce the share of that railway that I believe contributed to resource rents in the RST. And so I reduced that. The result of that was to reduce Crown expenses supporting resources and therefore increase the NCRs for those years. And if I could add, I'm sorry that let me repeat earlier. I'm sorry if that makes the court's job more difficult, but it was only in preparing to be here today that I realized the error.
Okay. Was there anything else you wanted to address on this slide? Shall we move on?
No, I'm good.
Okay, so let's go to the next slide. Slide 12. Can you take us through this?
Well, Mr. Hutchings raised a lot of other points that were not summarized on the previous slide. He raised various objections, both in his reply report and in his testimony. Now, I would characterize, in many cases, I think that I would characterize his words as indicating that we made an error, and I do not agree in these other cases that we made any error. I think instead what happens is that his opinion is different than our opinion on those matters, and he labels our opinion as an error because it disagrees with his opinion. And I'll try to make that clear as we go. These are differences of opinion rather than errors.
Okay. Slide 13.
So
Explain this.
I'm going to summarize in more detail our bottom line, but before I do it, I'd like to take the court through the conceptual approach here and the key ideas in order to help interpret the numbers. So net Crown resource revenues are a key in this matter, and we define NCRRs as the gross revenues that the Crown obtained from economic rents of resource production, minus the gross expenses that the Crown incurred that supported those resource rents. So the net here in NCRRs is the difference between the gross revenues and the gross expenses. Now, within that definition of NCRs is this key concept of economic rents. So economic rents guides our calculation of NCRs, but economic rents are not NCRs. But let me define. Rents, economic rents or resource rents, are income from the sale or use of unprocessed natural resources of various kinds, net of minus all of the expenses incurred by all parties involved in generating those revenues. So rents are income from the sale minus expenses incurred in the sale. But here I don't make a distinction between the Crown and other parties involved in resources. And more simply, we could say, even though we'll apply that definition, more simply, we could say rents are the economic value of the raw natural resources. That's what the resources contribute to the overall economic process.
As opposed to what the capital contributed, or exactly. The labor contributed.
Or the workers, exactly. Or any intermediate inputs as well, of course.
The overall economic process. What does economic process mean?
Well, I extemperated that line. What I meant to suggest is that everything Your Honor said before, right? So when these resources are sold or used and therefore valued in economic terms, getting them to that market or to that user will involve more than just the resources, the capital and labor as well. So that's the economic process I was referring to there. Really, it's just another way to say what Your Honor did.
Well, does it say, you say that is what natural resources contribute to? Is it contribute to the sale price?
Yes, exactly. So perhaps an example, if we were to sell at Sault Ste. Marie $10 million in upgraded iron ore, we would make a distinction between that $10 million and the resource rents, which really represent the mine head value of the resources before any upgrading, right? And so that might be, in this case, it might be $5 million mine head value versus $10 million upgraded at Sault Ste. Marie. The reason those two values are different is that $5 million of additional resources went in to upgrading them and getting them to Sault Ste. Marie.
Sorry, can you explain that term, mine head?
Mine head would represents the closest place to where the resources existed in situ in the ground.
In Sudbury, we got it.
Yeah. Sorry. That was for me. Sorry, please continue, Professor.
Okay, so that's rents. but my definition of NCRs included other terms too, Crown revenues from rents. So what are those Crown revenues? I'll talk about relevant Crown revenues. There's lots of revenues accruing to the Crown. So the relevant Crown revenues here are the levies on those resource rents, and levies that may have a meaning in law that I don't intend here. I simply mean the specific charges that the Crown levies on the activities that are generating those particular resource rents. The third step is, what expenses are we talking about? So again, I'll use the term relevant Crown expenses to describe that. They relate, and here, of course, I'm quoting and interpreting the court's decisions at stage one. The relevant Crown expenses relate to collecting, regulating, or supporting revenues from resource rents.
And when you say from resource rents on both these last 2 points, well, I'll go to the revenue question first. Relevant Crown revenues are from levies on, can I read this, on resources or resources that are ultimately brought to market, or?
They are resources that generate rents and therefore may generate revenues from rents. So typically they would be brought to market, but we can imagine certain situations. Indeed, I think I'll give a plainer answer if I may. In all cases where we would include that, there would only be rents, revenues to the Crown if there were sales in the market to the private sector, which in turn generated rents, and those rents are not the same as the profits of the resource companies by any means, but they're related concepts. So we're going to see a sale in a market that's going to generate some profit that'll be reported by a resource production company of one kind or another, or individual. That's not the same as rents, but they're related, and there will be taxes on those participants in the market or other charges, which we, based on economic principles, will determine whether those revenues generated to the Crown were incident on, were generated from the underlying economic rents. If so, we include those revenues.
Okay, so I understand that is taxes on the sale.
Yes.
But aren't there things like stumpage fees or mining royalties? Aren't those revenues?
They are. They are revenues, and indeed they're the most important revenues.
Right.
And I think that perhaps I'm making a mistake in using the term tax as an economist would. We would use tax to describe more than simply income taxes or sales taxes, but more broadly these revenue generating charges. The most important
from the resources.
From the resources.
Okay, you call them resource rents. I'm not sure if I get that, but I understand levies on resources.
Right. So if I could offer an example here, we do not include corporate income taxes or personal income taxes paid by market participants, right? So corporations involved in mining and forestry, individuals or unincorporated businesses involved in these sectors, they pay corporate and personal income taxes to the Crown. They're in the resource sector, but we do not believe that their incomes or the portion of their income that is taxable under the CIT, corporate income tax, or PIT, personal income tax, we don't believe those are tax revenues generated from resource rent. We think that it's much more akin to what Your Honor said before, a tax generated from the capital and labor involved in those activities. And I'll discuss that more later.
Okay.
So we exclude those income tax revenues. And when I say tax in court, I'm probably interpreted as meaning income tax revenues. I wish to be clear, we exclude those. When I talk about revenues, we're talking in the first instance about stumpage and MPT, our acronym for the mining profit tax. Those are the two most important sources of revenue that we include. I'll give a full list shortly.
Okay, thank you.
Just for clarity, when you say include or exclude, you're talking about your NCRR calculations?
Yes. And the term relevant on this slide says the same. It's what we include in our accounts on the basis of Ontario's own accounts, the public accounts.
Thank you.
Okay.
The next point is straightforward. NCRs are net Crown revenues, revenues minus expenses. NCRs could be a positive number or a negative number in any given year. And I believe that Mr. Hutchings agrees with us on this, that he makes that clear in his report and his calculations. Now, the word highlighted on this slide is unprocessed. We're talking about raw natural resources. I made the distinction between iron ore that's mined versus upgraded values at the downstream level. For the most part, Mr. Hutchings and Professor Stiglitz agree with that. They take the same approach of focusing on the raw natural resources. Mr. Hutchings made a significant error in one part of his testimony in his reply report, where he included downstream processing of resources, which is really a manufacturing industry. Should not have been included, and I will talk about that later.
Could you just explain that term a little more? What is downstream processing industries?
In the specific context, Mr. Hutchings did this. He talked, for example, about the income in the pulp and paper industry and certain wood manufacturing industries. We do not regard the income of those industries as resource rents.
Okay, let's move on to the next slide. So slide 14.
So this is a little more on NCRs, our concept of NCRs, if you're still with me. So the key concepts are revenue, expense, and rent. And I want to take you through in a schematic way what we're doing here. So we've already said that resource revenues, whether they accrue to private producers or to the Crown, resource revenues are composed of expenses and rents. And this picture is meant to visualize that idea. So the overall colored square on the right of this slide might be thought of as indicating the total amount of revenues from the sale of natural resources at the first stage at which they are sold in the market. So the overall square
sold by the Crown.
No, by any party, Your Honor. Typically, of course, the sale of the natural resources themselves, the Crown in some cases did engage in that directly, but typically the government leaves that to the private sector to mine or extract the resources and then bring them to market. So the sales revenue typically accrues to private parties, right? And so that's our first, as we go about measuring NCRs and breaking it down, that's kind of conceptually the starting point is, well, how much, as in the examples we talked about before, how much was sold in these resources by typically private sector parties. That's the overall square here. Now, the value of sales is not resource rents because we are going to need to deduct the expenses incurred in generating those sales in the way we've already talked about. And in this schematic, that is the horizontal line dividing the top and the bottom of the rectangle. So the area of that square up to the horizontal line, about 2/3 of the way up, measures the amount of expenses that were incurred in generating the revenues. So above, to the north of that line, what's left over from revenues is rents. Okay, so that vertical division within the figure just breaks down total gross revenues from the sale of natural resources into expenses incurred in generating them and the rents themselves. That's the first step here.
So this, do you mind if I point at it for you? Can you see my screen? Okay. So this gross Crown revenue square, that small square in the top right-hand corner, but for the gross Crown expenses, that darker red, climbing up there, that would have gone down the chart all the way to the bottom. Is that right? Gross Crown revenue. So this would have been all revenue, but you're showing expenses taking up part of it.
Well, not necessarily. And indeed, as we go forward, I'm going to try to move these blocks around the same way Your Honor's talking about. Not necessarily, however. So if the Crown had not incurred expense, right, but for those expenses by the Crown, two possibilities. One is that those expenses by the Crown would instead have been incurred by the private sector, right? So whatever the Crown was doing, represented by the big, dark pink block, but for the Crown doing that, the private sector would have to do it. Then we'd see the big, dark gray box get bigger because the private sector would be taking over those activities.
So I cannot read this square to suggest that the vertical axis is 1 at the bottom and 10 at the top. This square is not necessarily measured from the bottom to the top.
You could. I'm happy to do that. For example, if the total revenues were 10, then it looks like I've set this up so that the expenses would be 6 and the rents would be 4. I'm happy to talk about it in those terms.
So it could have been that the gross revenue was 10 in this. If there's a 10 at the top of this vertical axis.
That would be the gross revenue from the sale of natural resources, whether
not
it
necessarily
accrued
to the Crown
or the private sector.
Okay, got it.
Yeah. And so the but for, I'm going to engage in the same kind of but for exercise in just a second. But for now, I want to emphasize first just this distinction between expenses, no matter who incurs them, yes, and revenues. And that gives rise to the concept of the rents, which is the upper figure. Then the next thing, Your Honor's already ahead of me, I'll be brief, is the rents and the expense big blocks would then get broken down into the private sector and the government sector or Crown components, right? And those are two different processes. So on the rent side, right, the two upper blocks there represent the total rents. And then we would think about, well, you know, how much of that accrued to the Crown? They impose some taxes or charges or levies of various kinds on the rents per se, and then appropriated a portion of that to themselves. So it looks like, you know, 1/3 of the rents go to the Crown. The little pink, light pink block is about 1/3 of the overall rents figure there, suggesting a 33% tax rate on rents, more or less, right? So that's how we would break down the rents into gross Crown revenues from rents versus the rents that are left over to producers. And again, here I've said after tax because economists use that term after tax. I mean the rents from the resources net of the specific gross Crown resource revenue charges of various kinds. That's what's left over for the producers.
Another witness said that we can substitute the word excess profits for the term rents. Would you agree?
Largely, yes, and I can explain more if you wish.
No, I'm just trying to really to solidify in my mind the use of the term rent as opposed to revenue, expenses, and rent. Rent is the profits at the end, or the excess profits.
If Your Honor's willing, I will add just one more sentence.
Okay.
Excess profit means the profit that's left after deducting the costs of all inputs, including the normal return to capital. The normal return. And so, but the term excess should not suggest any judgment over whether that's too high or too low. That's just the value of the resources themselves. We could talk about it as excess profit, not in the sense as, well, it shouldn't earn that, more just in the sense as, having accounted for everything else, this is what's left over. Exactly. Okay. So I'm almost finished with this figure. The lower.
Just hold on 1 second.
I apologize.
No, go ahead.
Oh, please continue.
The lower area of the block is expenses, whether incurred by the government or the producers. Here too, we can decompose it into the dark pink area, which is the expenses that supported the revenues, that supported the rents, which were incurred by the Crown, and the dark gray area, which were the expenses incurred by the private producers that supported the rents. And that's a different decomposition, be different concepts here, different ways of measuring the public accounts. Again, the idea is the same. We first make a distinction between rents and expenses, components of the value of the resources that are not rents. And for each of those components, we can then, we take a holistic perspective for the economy at first in defining those concepts. Then we break it down into, well, how much of that was the Crown doing? Now, in this particular case, I've drawn it so that the gross Crown revenues area is smaller than the gross Crown expenses area. Of course, that doesn't have to be the case. As Your Honor suggested, the dark pink area could be smaller, right? I think the right way to think about it is you shrink it in from the left, the dark gray area gets bigger, but the Crown's contribution to those expenses gets smaller. The result of that would be the big pink area, the dark pink area gets smaller. Of course, net Crown revenues are negative in this case, but they get less negative and eventually become positive as the Crown expenses would shrink. So it could be positive or negative. In this case, I've drawn it to be a negative. And in my opinion, this question of whether it's a positive or a negative, or more precisely, the amount of the rents area that is appropriated by the Crown through its revenue policies, and the amount of the expense area that's incurred by the Crown through its resource management policies. Those are policy choices of the Crown. We're not passing, obviously it's not our job to pass judgment, but it wasn't necessary for us to have an opinion on whether those were the right policies in the past in order to do our calculations. We take no stance on whether the Crown appropriated the right amount of the rents to itself, or they made the right choices on when to incur the relevant expenses, or when they stepped aside and left it to the private sector. We don't need to know whether they made the right choice to do our calculations.
Okay, I think you continue on slide 15. Right.
I think we're ready for a break.
We're going to have the morning break.
The 15 minutes, is that good? Thank you.
Rise. This court will recess for 15 minutes. This court will now resume. You may be seated.
So I think we are moving on to slide 15, Professor.
That's right.
Okay. Yes, please.
So with this apparatus in place, I think it can be quite brief about the next two slides. 2 points about our approach conceptually to NCR, in contrast with that of Mr. Hutchings. First is about other Crown objectives. Mr. Hutchings said repeating his reports and testimony that he's concerned about other reasons why the Crown is spending resource programs. The Crown's expenses, resource expenses, they might also support, they might also support other objectives that the Crown supporting resource rents. But in most cases, that distinction, it just wouldn't matter for us. To give you one example, we know that logging roads have to be built into forest stands in order to support timber revenues, to be able to extract trees. And those roads could be used in some cases, for example, by other people, including cottagers. In some cases, to drive on those roads. And, so there'd be other benefits that the Crown might or might not bear in mind when it makes decisions about resource access roads. It wouldn't matter in that case, in our opinion. The road still has to be built in order to extract the resources, and therefore support the revenues from extraction. And that wouldn't change whether the cottagers were there and using the road. We would include that logging road expense, regardless of those other possible objectives of the Crown.
Do you prioritize those uses? Do you say that the reason you include it is because extracting the resources is the first and highest use? Or do you say it came first? Or like, how do you distinguish between uses? And you say you don't distinguish uses. If it serves to extract the resources, it's included.
I might describe it as it comes first, but not in a chronological sense, in a kind of a logical sense. That is, imagine here a but-for world. Suppose there were no cottagers. Would there be a difference in the Crown's policy? Of course, we don't have objective data to answer that question. We rely on sense of the importance of those other possible objectives to determine the level of expenditure. The logging road example, thought process would be like this. We'd say, well, the other users of the road might cause more depreciation, therefore more maintenance expense. Perhaps a portion of the expense should be attributed to those marginal costs. Marginal is our word for incremental, additional costs. But in this case, we would know those incremental costs are trivial. We know depreciation of a road is proportional to the axle weight of the vehicles, and we know logging trucks weigh a lot more than cottagers' costs. And so in that case, of course, we did not attempt to reduce logging road expenses to reflect those uses, those other uses. In that case, because we thought that if they had any impact on the Crown's spending in support of resource rents, it would be only trivial. We didn't make any adjustment in that case.
So maybe logging roads is a bit too easy an example. But it was your example. But you say any expense that supported resource extraction, even no matter what other uses were made of that or benefited from that expense, you counted it against revenue. Is that how best I understand it?
Yes.
Oh, I think your microphone has been turned off. It should be a red light.
That was me. Apologies. Yes, Your Honor. Could you repeat your last statement? Forgive me.
I think your evidence was that an expense was included if it supported extraction of resources, even if it also supported other uses.
Yes, typically yes, but not in all cases.
Okay. So, and the example you gave was logging roads, and I said, well, that might be a bit of an easy example. And you said you'd point out other ones as we went along.
Indeed, I'll mention a couple right now. I'd say, just to draw a line under our discussion, typically we rely on the information provided by the Crown.
Okay.
Right? The information in the public accounts, and when necessary, other supporting government documents, public documents, about what the purpose of that spending program was. We rely on that information, and we do exercise our own expertise and opinion in determining, what should be included and what should not. In certain important cases, we do, in conducting that sort of internal but-for thinking, we recognize that some component of the expenditure supported resources, but another component supported other uses, and we do engage in apportionment, even though it's not our typical rule. We do sometimes do it. We do it when we think, well, but for these other uses, the Crown would have spent less on this activity. If we believe that's true, then we only include a portion of the spending. And the two most important examples, not the only two, but certainly the most important ones are listed here: railways and parks. So railways, we know that that railways were important in resource development, particularly in the early 20th century in Ontario. And so the Crown's extensive support to railways was support to resource rents. But we include some of it. But we also believe that in spending so much on railways, the Crown was thinking about other users and uses too. They were thinking about passenger traffic. They may have been thinking about broader nation building objectives the Crown had in building particularly transcontinental railways. And so we don't include all of the railway spending of the Crown in our accounts of net Crown resource revenues, only a portion, and I will describe that. On parks, it's more straightforward, but I'll pause for a second.
Okay.
On parks, it's more straightforward. Sometimes there'll be a resource management category that we know includes some park spending, but it includes some resource management functions as well. In those cases, we do our best to figure out how to apportion that amount. That's an accounting matter rather than a conceptual or economic matter.
Thank you.
So we don't really care that much about other objectives of the Crown. Now, the next slide.
Slide 16.
Slide 16 just makes another point using this schematic breakdown that we've been talking about here. And that is that we have to be very careful in approaching the public accounts and our own accounts of resource revenues, that we don't get fooled by offsetting changes in gross amounts of revenue and gross amounts of expense here. And that if we, a particular point I want to make here is if we don't include all of gross expense as we see it in the accounts, we will make errors in some cases, and we will have inconsistencies in our accounts. So I'll like to just quickly go through the logging road example again in this particular context. So the point is the Crown makes certain policy choices, or even in some cases, accounting choices that affect gross Crown revenues and gross Crown expenses in offsetting ways. So this logging road we're talking about now, in some cases, it would be built by the Crown on its own account. That is, they would incur the expenses, and then they would attempt to recover that expense or some portion of that expense by higher charges on the resource companies using the roads. So our gross Crown expense account would include the spending, and our gross Crown revenue account would include those incremental charges intended to recover a portion of that spending. Okay? But in other cases, they won't do that. They'll say they might say to the logging company, you build the road, and we won't charge you those extra charges to recover those costs. So there's really no difference economically between those two cases. Either the Crown incurs the expense pro se and it recovers the expense or some portion of it, in which case both the gross amounts would be higher, or the Crown leaves it to the private sector to do it all. And both gross revenues and gross expenses would be lower. And we wouldn't want our accounts to treat those two cases differently. And so in order to treat them the same in both cases, we have to include all of the gross expenses if we include all of the gross revenues. That's the only point that I want to make here. And schematically, I'm just trying to show, well, what would happen if the Crown went to this policy of building the road itself? Well, the gross Crown expense block would get larger. That's the arrow moving the block, the boundary of the block to the right indicates that. If they recover some of the expense, then the light pink gross revenue block gets bigger as well. If we were to only count the gross revenues here, and we would, based on some argument, not include the Crown expenses, we would be wrong in the latter case where the Crown was incurring that expense and trying to recover it. And in effect, we would be penalizing the Crown in this action, in the matter before this court, we'd be penalizing the Crown for legitimate policy choice that it made to build the road itself. And in practice, Ontario has in some cases built the road itself. And in some cases, in many cases in recent years, they've left it to the logging companies to build the roads. They're both legitimate policy choices. And the outcome, in our opinion, of our calculation should not depend on that policy choice Or in some cases, it could simply be an accounting change within the government. In some cases, the expenses are reported net of the revenues, of certain revenues that are intending to cover the expenses. In other cases, they're reported on a gross basis, right? They'll tell us, here's the total amount we spent, and in a separate page, they'll tell us, here's the amount of revenues that we got from an associated program.
In your example that you're searching for consistency, no matter how the accounting is done, are you assuming that the Crown is always responsible for building the logging road?
No.
Because is your example that the Crown either builds it and pays for it, and so it's a Crown expense against stumpage fees, because that's a lot larger than whatever they get from taxes. So that's option A. And option B is the logging company, the forestry company, builds the logging road. And what? And they pay less of a stumpage fee?
Yes, precisely. The Crown, we can imagine explicitly the Crown saying to that company, we want you to build the road now, and we will charge you lower stumpage rates to offset it.
So that's why I asked, your option A, in order to achieve that consistency, you assume that the Crown has the first responsibility to build a logging road.
Well, I'm not saying that either one of those models is correct. I just want to do the calculation in a consistent way across those two models, both of which have been used by Ontario. So in either case, if one's view was the resource company should be building the roads, then we would say, well, when the Crown incurred that expense pro se, if they recovered some additional revenues for it, we better be careful to include both those higher gross expenses and the higher gross revenues in our accounts, right? So when we include both of them, they're going to net out in rough proportion in our accounts. It's not the case. I want to be clear, Your Honor, not the case that always when the Crown seeks to incur an expense and then recover it, they don't always recover 100% of it. I don't require that here. I'm going to make some choice about the amount recovered. I just want to be careful that in my gross accounts, if I include the revenues that are properly thought of as recovery of the Crown's expenses, I better include the expenses as well. That's all. And so whether you think the right model is the company should be building it, or you think the right model is the Crown should be building it, I just want consistency across the two sides of my accounts, revenue and expense.
Yeah, so my question stems from not presuming either is right or wrong, but my worry is about the consistency. Isn't it possible that in certain decades, the Crown said to the industry, we're going to build roads, because that's where we are. It's a nascent industry, or it's an industry that deserves support, or some policy reason they say we're going to build the roads.
Yeah.
And in some other decades, they say we're not going to build roads. We're going to charge the same stumpage fee. But if you want to engage in this industry, build the roads. Aren't those possible so that they're not consistent? The Crown still charges, let's say they charge 10 cents a tree in the first decades when they built the roads. And in the subsequent decades, I don't know if this exists, but in the subsequent decades, they still charge 10 cents a tree, and they have they don't take responsibility for the building of the roads. Well, but you're saying you would look for the cost of those roads and attribute them to the Crown?
Yes, I certainly would. In your example, the result of those changes would be, in my opinion, to increase the effective stumpage rate. Because now the Crown is not incurring that expense. Right. Yeah. They're still charging the same gross stumpage. So I'd say, well, two things happened. Crown made a change in its road building policy, and they made a decision to increase their tax effort. That's an economist term. Their effective tax rate on, or their effective stumpage rate on the resource. Those are two separate choices, and they occurred at the same time through the same mechanism. But in economic terms, they're two separate choices that were made. Why? Because we can certainly imagine a but-for world in which the Crown said, we don't want to build the road anymore. The company must do it. And we will adjust downwards our stumpage to leave the company, hold the company harmless in this change. We can imagine that, whether it happened that way or not. It's certainly conceivable. So I'm not, in looking at these accounts, I'm not going to say either that there was I wouldn't be able to see in the data that there was any policy change on the amount of stumpage to charge a year. All I see is the total amount of revenue received and the total amount of expenses incurred.
And you would just assume that the stumpage fees could have been more had the Crown built the roads. Or the Crown could have charged higher fees.
Well, in your Honor's example, the Crown's expenses were going down because they're going to leave it to, and I believe historically that's what actually has happened. We used to build, the Crown, the people of Ontario used to build the roads. Now it's more often that the company does it. And so in that particular example, I would simply look at the revenues and the expenses, and I would say, those are the amounts. And I don't know the particular policy process that led to that change. I just see the outcome of it. But I'm going to be careful that the way I do my calculations will be immune to any particular changes in the Crown's policies or changes in the accounting rules that the government is using. As I said, both things could happen. So I'm not really making the kind of inferences that Your Honor is asking about here. I just want to make sure that if there were those changes happening in the background of my data, they wouldn't lead me to change my conclusions, because it's just not, these accounting policies or these revenue policies, they're not part of what Baudouin and I are trying to do in this case. We just want to measure the outcome, which was the Crown revenues.
Thank you.
I just want to clarify that, Professor. The expenses you've included in your NCRR calculations came from the public accounts of Ontario, or the public accounts of Canada, is that correct?
Yes, in all cases.
Right, and those are all Crown expenses.
Yes, by definition, we book spending if it was booked to the consolidated revenue funds of those governments in their audited financial statements, which are the public accounts.
Right. Okay, and in your diagram here, when the red boxes expand, you have it going to the right. That means the Crown is getting more revenues. Does that also mean the NCRRs go up?
No. It means that the gross amounts are going up. So this would be a case, these things are getting bigger. This would be the alternative case in which previously the Crown have not been building that road. Now they decide they're going to start to build the road. So the dark pink block would get larger. But they also decide to recover a portion of that, 100% or less of it, in higher charges on the operators. And then the light pink block gets larger as well. So my concern is not to adopt a method that will cause me to include in my accounts the increase in the light pink block without including the corresponding increase in the dark pink block.
And the dark pink block being the new Crown expense.
Yeah.
Okay.
I wonder if I can just ask a point that might be a clarification for everybody, if I'm not intruding. Whatever is represented in these blocks is not to scale, is it? It's not intended to be to scale.
Well, there's no numbers. Well, I'll ask the professor. Well,
that was my understanding. I'm happy if you could confirm that.
I can confirm, yes.
Okay, thank you.
Thank you.
And was there anything else you wanted to address on slide 16, Professor?
Well, the bottom line is, for me, no method that excludes Crown resource expenses or a portion of it in a consistent fashion over time could result in a consistent set of accounts for NCRs because of these kind of changes that affect gross values without affecting net values. So I would suggest we go into slide 17.
Okay, so let's go to the next slide, slide 17.
So last point on the concepts here is just to contrast what I'm talking about to what I see Mr. Hutchings espousing in his various documents and testimony. His approach is different. Mr. Hutchings believes that Crown expense should only be included in the accounts if I may, I'll read this quote. if someone would reasonably expect the incremental increase in included relevant revenues to be greater than the expected portion of the expense attributable to the relevant revenues. Now, that's a mouthful. I believe what it says is I'm only going to count a particular expense program if it's reasonable to believe that that expense program gave rise to at least that much in additional gross Crown revenues. Not some amount of additional Crown revenues, but at least as much and perhaps more in gross revenues than that amount of gross expenses. Now, in my opinion, this is a very extreme view of how we should go about counting revenue and expense in our account. And I believe it's not logical. It leads to illogical conclusions. I'd like to go through just one more example here.
Sorry, before you do that, can you just tell me, is that approach of Mr. Hutchings consistent with economic principles?
Well, I think we could make an inference about what principles might support it. I don't think Mr. Hutchings invoked any specific economic principles here. I'm going to suggest an answer to that, which I'd prefer to defer for just 2 minutes, if I may.
Happens to you too.
I'm used to it. Please, you're going to go into the example.
Well, if I'm ever not responsive, someone will tell me, I'm sure. So my example now is a geological survey. Let's imagine that the Crown is going to undertake, pro se, a geological survey, and it's going to cost $1 million. Is that a desirable program for the Crown to engage in or not? Based on economic principles, I would say that's a desirable program if it increases resource production by at least $1 million. Resource production net of all the private costs of generating that production. Right? So why would I say that? Well, we got knowledge from that survey, helped us figure out where the resources were and what their values were. That led more people to engage in resource extraction activities. It needs to generate at least $1 million in those additional activities before it was worth it for us as a society to spend on that survey. That's not the only economic principle one could apply. I didn't talk about equity, whether that was fair for all parties involved. I just added up all of the costs, $1 million for the Crown, compared it to the benefits, $1 million in additional resource funds. But that's the model I would take, and that many economists would recommend government takes in deciding whether to spend that $1 million on the survey. And I didn't talk at all about whether those additional resource rents went to the Crown or to the private sector. It's not relevant, in my opinion, to determine that. That survey would be desirable if it generated those additional resource activities. Now, Mr. Hutchings would take a very different approach here. He would only include the expense of $1 million on the survey if he thought it was reasonable to think it led to Crown revenues rising by at least $1 million. He wants all of that expense to be recaptured in the form of additional revenues. And, economists do not typically require government to be run on a for-profit basis. We don't say government should only engage in this activity if it's going to make a profit on it. In fact, public economists would typically say, if an activity could be run on a for-profit basis, let's leave that to the private sector. Government needs to concentrate on providing public goods and public services, which we define as those activities that the private sector can't do on their own. Now, in this case of this survey, it is a public good, right? Geological surveys generated knowledge for all parties to the mining process in Ontario in the past. All of the companies benefited from the government's investments in geological surveys, and even potential future participants, right, could go and get those surveys from the government and learn about where and how much to engage in prospecting. So we wouldn't want to leave that to the private sector, and we would not require that the government make a profit when it engages in those survey activities. But Mr. Hutchings would.
He didn't say a profit. He said revenue.
Well, I'm using the term profit loosely to mean here the Crown revenues must rise by more than Crown expenses. Crown revenues would have to rise by at least $1 million. And so profit in the sense is not a term that Mr. Hutchings used, but it's the difference between the Crown revenues he imagines, he wants it to be at least $1 million, and the Crown expenses, which are $1 million.
Right. He wanted, my understanding was that it wasn't a profit-seeking notion attributable to the Crown, but rather match the revenues to the expense, which is revenue neutral, or sorry, profit neutral.
Yes. So we could think of that, therefore, as a profit of at least 1 penny, or even, you know, in the case of just pure break even,
yes, that
too would be, in economics terms, that would be making a profit. Would be making a profit of 0, but not making any losses. So my point stands, with Your Honor's interpretation of it, of Hutchings, Mr. Hutchings wants the Crown to at least break even or make a profit every time they incur an expense that he's willing to include in his accounts. And we say we disagree.
Or isn't the words reasonably expect? Because my understanding was they weren't time sensitive, these expectations. You don't have, it's not necessary in order to include the expense. It's not necessary that that revenue be reflected that year.
Right. I think that's correct. Reasonably expect are terms that I don't recall Mr. Hutchings ever defining what he meant by that.
Okay.
But I will go this far. It doesn't matter when Mr. Hutchings, if Mr. Hutchings is applying the reasonably expect standard, I don't care whether he's applying it today when the expense is incurred or at some arbitrary time in the future. I believe it's too strict a standard to apply for determining whether that survey expense should be included.
Thank you.
Sorry, under the Mr. Hutchings approach here, if he excludes the expenses, would he have included the revenues?
Well, that's a really good question, right? So what he says in the quotation is, I'll only include the expense if I think it's associated with additional revenues of at least the same amount. But he doesn't say, and you know, if not, if I don't include the expense, I will always go and exclude the gross revenues as well. And in practice, it's not always clear how Mr. Hutchings applies this principle, and I don't blame him for that. But in practice, it turns out that in some cases, Mr. Hutchings applies this principle to exclude the expense from his accounts, but he does include the associated incremental revenues. So he thinks, you know, in this example, if he thought we can only reasonably expect the Crown to generate $200,000 in additional revenues associated with that $1 million expense, he would exclude the $1 million in expense, and he would include the $200,000 in gross revenues in his accounts. So he's completely inconsistent in his treatment of his revenue, gross revenue account and his gross expense account. Well, if I may, in my opinion, that's an inconsistent approach. Mr. Hutchings seems to be applying a different model. You know, it would be a consistent approach if you accepted the implicit assumption here, which is that the minimum acceptable tax rate on resource rents is 100%. And the plaintiff's experts at various points suggested the Crown should have generated 100% of the economic rents as revenues to the Crown, and the failure to do so they regard as germane to this case. Beaudoin and I don't agree with that. We don't think it was possible for the Crown to generate 100% of the rents as revenue to itself. And we don't think it's germane to determine whether the Crown policy on revenues was right or wrong. So in this case as well, what Mr. Hutchings effectively saying is, this program, if it costs $1 million to do the spending, I want then it's going to generate at least, it's only a valuable program if it generates at least $1 million in private rents. Mr. Hutchings then says, I want at least $1 million of private revenues. So he's saying,
I want $1 million private
revenues, I think at that point in the sentence, he insists on at least $1 million in private revenues. So at least in some cases, he's going to be saying, I'm going to reject the inclusion of this program as expense unless the effective tax rate on the associated rents is 100% or more. Again, we don't agree that that's a principle or a standard that should be applied in this case. And Professor Beaudoin will talk at length about why that's the case. I just want to call attention to, even here in thinking about NCRs as opposed to the economic rents approach, Mr. Hutchings is applying that same standard.
And in reviewing his work papers, did Mr. Hutchings include geological surveys?
He did include in some cases, but not all cases. As I'll discuss at length, he effectively excluded all expense of the Crown after the year 1945. So any geological survey, incremental expense for geological surveys after 1945, it's not in his accounts. Even before 1945, he engages in a similar exercise to us going through the public accounts. He'll often exclude things that would have led to this kind of knowledge about geological potential of mining in Ontario. For example, grants to the Canadian Institute of Mining and Metallurgy. That was a professional association of people whose job it was to value, to search for and value resource stocks in the ground. Other similar expenses, if they were included within a larger bucket in our public accounts, he would have excluded it or excluded a significant portion of it in many cases. So I think it's fair to say in this example, he does include logging roads whenever that appears in the accounts. In this case, I would say he generally excludes all research associated with the geological potential of the province, which in turn generated future resource rents.
Thank you. Shall we move on to slide 18?
I'm going to briefly summarize our conclusions now based on those principles. We will show, and this is a major point of contention with the plaintiff's experts, we will show that NCRs in the RST area became negative beginning around 1960. And this figure shows NCRs that we have estimated year by year back to, it should be 1850. I'm sorry, I can't read it from this distance. And I've put our numbers here into inflation adjusted terms. That means I've adjusted for the change in the value of a dollar due to general price changes over time so that they're roughly comparable across years. But we haven't yet talked about present value and compensation for the time value of money. So when we do that, the earlier years will become more important because of that compensation for the time value. But this gives you a sense of what our accounts look like on an inflation adjusted basis. And you see that there are ups and downs up to around 1960, reflecting economic boom and bust and resource boom and bust in Ontario. But after 1960, we get consistent negative values for net Crown resource revenues. That is, the gross revenues of the Crown were less than the gross expenses of the Crown to support resource revenues.
So just so we understand that, what exactly is inflation adjusted?
It's just, I went out and got a kind of a CPI index. Those exist in official sources only back to 1926. I went and got estimates of prices prior to that. And I multiplied the nominal values in the earlier years by the change in prices over time. So, though it is outside our specific instructions in this case, it is important to understand the economic reasons why resource rents in the RST have fallen and net resource revenues have fallen. It reflects a number of factors. There's been a depletion of our resource stocks. Obviously, the most valuable virgin timber, standing timber, was exhausted in Ontario 100 years ago. In the RST, even pulpwood stocks started to decline, I'd say, in the post-World War II era. The most valuable stands of pulpwood were exhausted over that period. The mining as well, in the post-war period, there have been a decline in our proven reserves of the most valuable metal mining resources since World War II. Say, for most metal mining, we only have 10% of the value in the ground today that we had 50 or 75 years ago. So resource exhaustion is part of the story here, but it's not the whole story by any means. As well, we know that there's been a decline in real resource prices, that the value of these minerals have fallen. A number of factors are at work, but international competition is an important one. Ontario firms have to sell into more competitive markets for wood products and mine products than in the past. And lastly, there has been an independent rise in Crown expenses. In particular, there's been a rise in forest regeneration expense. Most forest conservation, reforestation, silviculture, and modern forest management expenses did not exist even as recently as 1945. We just didn't do the things in the past that we do today to protect and restore the value of the forest that's being logged. And because those expenses have risen, net Crown revenues have fallen.
And you use the term silviculture. Can you explain what that is?
The planting of trees and the science of how best to plant trees to maximize potential.
Was there anything else on the slide you wanted to address?
Well, there is the last bullet, which says the decline in NCRs may also reflect policy decisions on the level of support the Crown supplies to the resource sector and the level of revenue it tries to generate from the resource sector. That might have changed. We're not asked to comment on that. We don't think it's germane to our assignment of measuring the NCRs to know whether the Crown has made changes in those policies. We don't speculate.
Okay. Shall we move on to slide 19? Can you take us through this slide, Professor?
So these are our...
Excuse me, just so that I can follow. I'm sorry, where is section X? Just trying to follow the source.
You see that, sir, on the bottom
the
of
bottom
slide
it says
18?
Nominal values report that this, am I to understand that what the witness has just testified to is contained in nominal values figure 1 in section X somewhere? Well, but
yes,
where is section X? I don't
section
see
X is actually section Roman 10 of our nominal values report. And nominal values report is a term that Baudouin and I use in talking about it throughout our reports. Mr. Hahn can tell you.
So that's where we will find the discussion about depletion and exhaustion.
I will hazard the guess it's Exhibit 60.
Exhibit 60.
All right, we'll look for it. Thank you.
Thank you.
Thank you, Professor.
So on to 19, please.
Yes.
Slide 19. There are bottom line numbers. Just summarize for convenience to let you know where we're going. We estimate that the present value of NCRRs, 1850 to today, including compound interest, is a net cumulative loss of $4.6 billion. That is, cumulative NCRRs, including interest, amount to minus $4.6 billion. And you saw a hint of that in the last figure. A dramatic fall in annual NCRs since around 1960 is reflected in this aggregate total of a negative NCR. Now, the question is, what is the relevance of that to the augmentation promise? In our opinion—
Can I ask something smaller first? That interest, is that same interest we talked about earlier? It's a different interest rate per year?
Yes.
Okay.
Yep.
And it's an inflation rate?
No,
interest?
Your Honor. It's our measure of the compensation that would be due to any parties for the time value of money. That is, funds that were received in the past or should have been received in the past. When we value them today, we add compound interest year by year in order to reflect the time value of receiving something in the past versus today, or the lost opportunity to have the funds in the past, spend them or invest them, and allow them to grow through savings and investing activities. So when we talk about present value, we're adding interest to reflect those values. The way we do that is each year we measure the rate of interest on Government of Canada long-term bonds, which is regarded as a safe investment vehicle, always has been, and that we think, as I will explain later, is the best economic measure of the time value of money. So $1, this I'll discuss in more detail later, $1 received in 1850, we value today, or in 2020, at much more than $1, reflecting that opportunity that one would have had to save and invest in long-term government bonds. That's what we're capturing there. Now, some portion of the return to government bonds may well be compensation for inflation. One of the reasons why a bondholder is lending money to the government or anyone else would insist on a positive rate of interest is that they might expect that there'll be inflation, that they're going to be paid back in dollars that are worth less in real terms because of inflation. So that's part of what we think is explaining why there's a positive interest rate on bonds or bank loans or other vehicles like that in the market, partly compensation for inflation. But even if investors didn't expect inflation, they'd be very likely to say, well, if you want my money, you're going to have to pay for it. So interest, the rate of interest captures all of that in the standard economic model.
Thank you.
Please continue.
Okay, well, so what's the relevance of this minus 4.6 billion present value NCRRs? In our opinion, the treaty was not a joint venture, which is the term that Professor Stiglitz used in talking about it. And therefore, the Anishinaabe do not bear any share of those cumulative losses in our opinion. In our model, our interpretation of the economic principles at stake here and the treaty, interpreting the treaty through that economic lens, we don't think that the Anishinaabe treaty party should be called on to pay that $4.6 billion cumulative loss or any portion of it. We don't think they should pay for losses. I'll make it clear exactly how annuities are calculated later on here. For now, I just want to emphasize that our estimates suggest that NCRs were positive in the early years of the treaty. Early means between 1850 up to around 1960. They were typically positive NCRs. And if the augmentation promise had have been implemented over those years in the way the court has said it should have been, then the annuitants would have received augmented annuities in most of those years between 1850 and 1960. The failure and so we want to put a value on that, right? So the fact that they did not receive those augmented annuities as we calculate them, the way I'll explain, we're valuing, when we value those amounts plus the interest on those amounts as compensation for the time value of money, we come to our present value of annuities calculations, right? So it's based on the NCRs, but it's completely conceptually distinct from the NCRs themselves. I'll explain why. But the bottom line calculations for the value of annuities then are positive numbers, not a negative. And they're the numbers that we talked about in the very first slide of numbers that are repeated here. So it depends on what sharing rule we imagine is applied in converting NCRs into augmented annuities. If 100% of NCRs each year is the basis for sharing and generating augmented annuities, then the value of augmented annuities, that is the value of all annuities that would have been paid, is 999 million, including interest today. And there's a range of such values, all of which are positive numbers based on our different notions of the sharing rules that would have been applied. Now, our preferred model is, again, number 2, risk-adjusted NCRs are the basis for sharing. I'll explain that later, but the idea is pretty simple. Sharing is adjusted to reflect the risk borne by the Crown. So standard economic principle is that risky income streams have a different value than safe income streams, and that parties to contracts in markets have to be compensated for bearing risk. So we have developed a model of how the costs incurred by the Crown include the costs of bearing such risks and the way in which we believe they should be compensated if the augmentation promise is to be fulfilled without incurring loss to the Crown. I'll explain that in detail. But I've said enough for now. I hope to justify emphasizing item 2, risk-adjusted NCRs are the basis for augmented annuities. And we have valued those augmented annuities on that model at $386.9 million to the annuitants, including interest, to today. In contrast, we believe the amount of annuities actually paid in the past, including interest to today, is 302 million. The difference between the value that we're reporting for any particular sharing model and that 302 million actually paid would be amounts not paid to the annuitants plus the interest on the amounts not paid.
So that is 386 minus 302.
Which would give you
84.
84, thank you. Or even almost 85 in that case would be, the court can understand, I'm reluctant to use the word damages because that's your territory and not mine. Compensation, thank you.
Can you tell me how you get from 168 risk-adjusted NCRRs to 100%? 100% of that, oh, that's the 100% of unadjusted NCRRs is $1 billion.
Yes.
Got it.
This table is complicated. Our instructions included a lot of questions that we had to answer. And the answers to all of them, the bottom line answers, are all in this table. But I probably did not make it clear enough that the first two numbers are about NCRs, yes, and the remaining 5 numbers are about annuities. Those are conceptually different things. NCRs are not annuities in our model. The first 2 numbers are 2 different ways of valuing the NCRs of the Crown. Mm-hmm. And the NCRs are the basis for determining the augmentation of annuities, of course, but they're not the same thing. And the next 4 numbers are about the value of augmented annuities under different models.
So should it be obvious, or is this something you're going to tell me later, how you get from 168 risk-adjusted NCRRs to the share of unadjusted NCRRs? Like where does that, if the number 1 billion is 100% of something, what is it 100% of?
Yeah. So no, I would not suggest comparing risk-adjusted NCRs at 168 million to any of the annuities based on the unadjusted model. Right. Instead, in our opinion, the 186 million in risk-adjusted NCRs, that's some measure of the value to the Crown, which I'll discuss.
168? Yeah, you said 186.
168.9 million. Yes. That should be compared to, it's conceptually comparable to the value of annuities based on the risk-adjusted NCR sharing model, which is 386.9. So I would ask Your Honor to, in looking across this table, compare the 168 to the 386. They both use the same notion of adjusting for the cost of risk borne by the Crown. And they're roughly comparable in magnitudes, aren't they? All right. Roughly comparable. And the unadjusted, the rows labeled share of unadjusted NCRs, these are really models of a fixed share of actual NCRs each year contributing to the payment of annuities. It's not our preferred model. I think it might be the preferred model in some sense of the plaintiff's experts. Those numbers, there's no adjustment for risk that goes into the calculation of augmented annuities for any of the rows under the number 1 share of unadjusted NCRs. And so really conceptually, those numbers that range from 999 million to 556 million are most comparable to the very first number, the unadjusted NCRs collected by the Crown. So those numbers are most comparable to the minus 4.6 billion. They're very different in magnitudes, but they're most comparable in terms of the concepts being applied. There's no risk adjustment.
All right. So I think I understood that because they're both labeled unadjusted NCRRs.
Yep.
And the first unadjusted NCRR is a negative number.
Borne by the Crown.
Just it's a negative number. And the share of unadjusted NCRRs at 100% would be 100% of those years in which it was positive. Is that how I read the relationship between those 2 numbers?
That's actually pretty close, but it's not precisely the way we went about doing it. But in effect, it is quite similar to just counting 100% of NCRs when NCRs are positive.
Okay. And would all of those, would that be the same for the 100%, 84%, 50%?
In all cases, it's a fixed share of NCRs that feeds into our Vidal-Anderson annuity model, which basically limits the payments to be positive, as Your Honor just suggested. It's a fixed share year by year.
Okay. In years they were positive.
Roughly speaking, but I hope Your Honor will still come back on Friday when I explain it in more detail.
I think we'll all be here.
I'm sorry to make a joke, but
I haven't at that.
no,
yet.
you're almost right, but of course there are
Okay.
some details that we think are pretty important.
So I might have a dumb math question. So let's look at your middle section of this table. Share of unadjusted NCRRs. 100% you have 999 million.
Yeah.
And 50% is 556 million. So that's not half in terms of pure numbers. Can you explain why that is?
Well, we don't think it was so we have a model of how annuities would have been calculated in the past that we call the Vidal-Anderson model. We don't think it was simply fixed sharing of NCRs. We don't think it's precisely the same as fixed sharing of positive years of NCRs. It's not quite that simple. And the two key ways in which it's different is first, we think that the amount of annuities paid out in any given year would depend on the band trust account rate of the Federal Department of Indian Affairs in that year. That changed from year to year. That changes the weighting somewhat. And second, we think that there will be some losses on the capital in the annuity accounts in our approach. And we don't think that the annuitants should be called on to pay those losses. The result of that is it's slightly less than proportional when we reduce the share. It doesn't reduce the value quite one for one.
Want to move on to slide 20?
Please. So in terms of bottom line, I do want to compare to what Mr. Hutchings has done in his report. Here, we have to focus on NCRs. So even though NCRs, in our opinion, are not annuities and not most relevant to annuities, I want to compare our measure of NCRs to his. These are the key building blocks.
Key building blocks.
So Mr. Hutchings estimated cumulative NCRs, including interest, to be $56.9 billion. We estimated it to be minus $4.6 billion. So far, we are $61 billion apart. And I feel I should apologize on behalf of economic experts for that. That's a big gap. But we can begin to understand the reasons why we arrived at different numbers if we break it down a bit. And so what I've done in this table is to first report our value, minus $4.6 billion. Now I'm doing it in millions of dollars, so that's 4,581 million negative value. And the parentheses in my tables means a negative number, which is an accounting convention. So that's the starting point. We get that by taking our nominal NCRs in each year, adding interest at our rates of interest, compounded up to the year 2020, and then adding all of those year by year present value amounts together to get minus 54581. What I've then done in the second row is to say, well, let's take Mr. Hutchings' annual nominal NCRRs and then add interest at not his interest rates, but our interest rates. Okay? And then we can add that up. When I do that, his nominals valued at our interest rates add up to positive $8.9 billion. So the difference between our starting point minus 4.6 and that intermediate positive 8.9, $13.5 billion difference reflects the difference between our nominal calculations valued at our interest rates. So that 13.5 tells us there's a pretty big difference in how we went about the calculations year by year in nominal terms. But even if obviously I don't believe I should, even if I were to adopt all of his approaches to the nominal calculations, I'd arrive at his nominal NCRs, then I use my interest rates, it only adds up to 8.9 billion in present value in 2020. The remaining difference from 8.9 billion up to 56.9 billion, it's a difference of $48 billion present value, represents the difference between his interest rates and my interest rates, our interest rates, Baudouin and I. And so what do we learn from this? We learn that both the nominal calculations and the present value conversion factors are relevant to understanding the differences between our bottom lines on NCRs. In my opinion, therefore, the key factors explaining why Mr. Hutchings arrives at a number that's too high are two. First, his annual NCRs are too high in nominal terms. And that, as I will explain, is because he disregards relevant Crown expenses. The second reason his number is too high is that his annual interest rates are too high. And in some years, it might be only by a fraction of a percentage point. But those differences compound over 170 years. In this case, about 90%, for Mr. Hutchings, about 90% of his present value NCRs is interest. It's not the original amounts that he says the Crown received in nominal terms. It's the interest that he's added on that from that date in the past to 2020, about 90%. So even
90% of the difference is
no,
interest.
I'm sorry. Of his 56.9 billion, we can, setting aside the comparison, we can decompose that into his nominal values and the interest that he adds to it. And I believe that the interest is 90% of the 56.9 billion total. And the nominal amounts, you could think of this as principal versus interest, right? The nominal amounts are the principal, the interest is the interest. The nominal amounts are only about 10% of the total 56.9 billion. So the result of that is that small errors in the interest rates have a huge impact on the final outcome because interest is so important in this case, which is supposed to capture 170 years of payments.
You call them errors, but earlier you corrected yourself at one point and called them differences of opinion.
Yes.
I'm
willing to accept that. I will explain why I believe that my opinion is correct and Mr. Hutchings is incorrect. And in this case, I'm assuming that you will agree with me. So
it's a team effort.
So we could go on to slide 21.
I'm actually noting the time. Maybe before we start another slide, maybe this is the time to take that lunch break.
All right. You'll let me know, sir, if when you say that, if you're keeping up to your budgeted time, you're not getting too far behind.
Yes, Your Honor.
Okay. I'm just going to do one catch up, please. So just to your very last point, sir, the nominal NCRRs in Mr. Hutchings' calculation are 10% of the 56 billion.
I believe so.
Thank you. Okay. Let's take lunch. What do you say?
I think we're still on track, so I don't think there's a need to shorten the lunch break. I think we're fine.
2:15? Okay.
Thank you, Your Honor.
All right. This court will recess until 2:15.